I'm going to show you things in this course that likely you haven't seen before. What I'm going to do is describe how to look at the markets in order to trade them correctly rather than looking for a trade. What we're going to do is we're going to learn throughout this course why looking at the markets is similar to learning another language. We have to understand the nuances, we have to understand the big picture, we have to understand the detail behind the detail, and once we can understand what we're looking at visually and why certain things happen over and over and over again, then and only then can we begin to make positive trades on a repeatable and consistent basis. There are a couple of things that are important to note beginning this course. If you're an experienced trader, the course may start out kind of slow. There may be some things that you've heard before, but what I have to do is build a foundation for everybody that's taking the course, from beginner to experienced and advanced traders. I do recommend, however, for all traders, don't skip sections, because you're going to pick up things, or at least have them as a refresher, things that you may not have thought about in quite a while. So go ahead and take the course in its entirety from end to end before deciding exactly what components that you want to review over and over again, because what I also can tell you is the more times that you watch and listen to this, the more things you're going to pick up. The first time through, just sit back, listen, gain the concepts, understand my teaching philosophy, understand how I'm approaching the markets, and then when you go through it a second and third time, you'll start to pick up nuances and you'll start to understand what's important on a daily basis, what's important on an hourly basis, what's important when entering a trade, and all those things combined we're going to build upon as we go throughout the course. Here's the main theme that's going to be discussed and disseminated and deciphered and picked apart and peeled back the onion, and we're going to look into how to use support and resistance, patterns, time, and mathematics to trade in the S&P futures. And by the way, everything that I'm going to show you in these lessons throughout this course isn't only applied to the S&P E-mini futures. Everything I show you can be applied to virtually any chart in any market, whether it's a stock, a commodity, an index. It really doesn't matter, and you'll start to get that concept and start to understand why I say these things throughout the course, that these can be applied to any chart whatsoever. So if you like to trade stocks, you can absolutely use these things to trade stocks. If you only like to trade futures, you can absolutely use these things to trade futures. I'm also going to show you why looking at other markets are going to help us throughout trading in the S&P E-mini and vice versa. There is absolutely a mountain of information that you're going to take in that's going to help you succeed and trade more consistently in the markets, more specifically the S&P E-mini futures market. One of the reasons why I made this course is because of the characteristics and why a lot of traders prefer the S&P E-mini futures contract. I have a lot of traders that have taken other courses or other services that I offer that have requested a course in the S&P E-mini futures. I test marketed the demand for S&P E-mini futures trading information and daily support and resistance information, and basically what came back is the demand is there, the want is there, the need is there, so therefore I decided to make the course, and as such I'm going to give you everything I have. One of the reasons why traders like the S&P E-mini futures contract, or I should say several of the reasons why, they trade around the clock with minor exception. There are very low margin rates, meaning you can get in with a broker, usually for a minimum deposit of around $1,000. Some are more than that, some are $2,000. But per contract, you can get in trading a contract with margin for as low as $500. I've even seen $400 on the S&P E-mini futures contract. The volatility, generally speaking, there's enough volatility in the S&P for you to make money each and every day, or for you to at least attempt to make money each and every day. There's a liquid market, and that's the whole point. It's a market that's not necessarily going to go to sleep for a week or two at a time, other than during holiday times where trading can be a little difficult. The leverage in trading the S&P E-mini futures contract. The leverage, and I'm going to get into this in a minute in the next slide, leverage is tremendous. The amount of money that you can make per point as compared to the amount of margin requirement that you have to put up is tremendous. That's another reason why a lot of traders prefer the S&P E-mini futures or other futures contracts for that matter. The commissions are very low. They range from 50 cents a commission and even lower than that per turn, meaning per side of the contract. Or a turn would be a round turn. So 50 cents in per contract, 50 cents out. Maybe it's 60 or 75. It depends on your broker. It depends on the amount of trading that you do. But those are the general ballpark figures that we work with. And one of the most important aspects of trading the S&P E-mini futures is we trade both sides of the tape. Frankly, we don't care whether the market's going up or down. A trade is a trade. We're only looking to borrow the S&P E-mini futures contract for a period of time in order for us to make the trade successful and profitable, and then we get out. If that means trading it on the downside, meaning a short trade, we're betting the market's going down, that's fine. If it means a long trade, that's fine too. We'll get into throughout the course, there are certain particular times of the day that you don't want to short the S&P. There are certain chart patterns that you don't want to short the S&P. We'll get into all that. Of course, the most important part of any trading exercise is understanding how the money works. So let's go ahead and take a look at that. And don't get bogged down in this. If you've never seen this before, or if it's foreign to you, don't worry about it. I'm going to get into this throughout the course. You'll begin to understand very rapidly how all this works and how it comes together. The S&P, as it's going, or futures as they're called, as they're going up or down, each particular tick in the S&P case is a quarter of a point is one tick. 1 point equals 4 ticks. So if the S&P goes up 2 points, it's known as 8 ticks. That's the way it works. In this case, each tick is represented by $12.50. So you're risking $12.50 per tick. That's what you're risking, and that's what you stand to make if it goes in your favor. Extrapolating those numbers out, 1 point equals 4 ticks, or $50 in the S&P E-mini futures contracts. Other futures contracts have different price per ticks, or different amounts of dollars and cents per ticks, but we're going to focus on the S&P, and right now it's $50 per point, or 4 ticks. Pretty simple stuff. The futures are also depicted in months, and months are correlated by a letter code. So as you can see, January is F, February is G, and so on. So each trading platform, or different trading platforms, may have different symbols for the S&P E-mini and the corresponding months. So as an example, I use 2 different trading platforms. One is TradeStation, where the S&P E-mini futures contract is ES, then the letter that corresponds with the month we're in, and they go by quarters. In the beginning of the year, we're trading in the March contract, which is H, and once we get into about mid to latter part of March, we switch over to the June contract, and so on, and it goes down throughout the year like that. Other futures products, or other futures or other commodities, trade in each and every month throughout the year. So the symbol on TradeStation is ES, the month that we're in. So if we're in March, it's H, and then the year we're in, 17, ESH 17. Conversely, if I look over at my NinjaTrader platform, which is another platform I use, the symbol for the ES contract is ES 03-17 for the same March contract. Each trading platform has their own nuances. They'll tell you what the corresponding symbol is accordingly. Just for informational purposes, traders may be curious, and who exactly does trade in the S&P E-mini futures contract? And basically, It's the entire investing community, entire Wall Street community, if you will, institutions, banks, hedge funds, mutual funds, insurance companies, high-frequency trading firms, retail traders like you and I, and everybody in between. It's a very widely traded product. It's used for various purposes. It's used for going long the market. It's used for hedging the market. It's used for primary trading purposes. It's used to augment a portfolio. It's used for short-term trades, and it's used for long-term trades. All of the above. And the proper nomenclature for some of those types of trading are positional or swing trading. Those are your longer term trades. Those could be from several days to several weeks or months. There are day trading, where you're typically going to go home at the end of the day in cash. You may buy or sell in the morning, but you may hold all day, but you may go home in cash. And that's a day trade. It could be held from minutes to hours. And scalp trading is typically where traders are looking for a point, 2 points, 3 points. Maybe they're looking to turn a scalp trade into a partial or a day trade, but they're typically looking to get in and out in minutes rather than hours or longer. That's traditionally the definition of a scalp trade. And this will wrap up or conclude our introduction video. This is the introduction to basically the S&P E-mini and what we're going to be doing. We're going to have a ton of charts to look at. We're going to have a ton of information to decipher about how the markets trade, and that is the foundation of the course that's in front of you. So I look forward to teaching you, and I hope you look forward to learning as much as you can about this trading methodology, philosophy, and strategy that you're going to learn over the next several hours.